Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for September 27, 2010. This is Patrick Ceresna. As always, we start off with the S&P 500 using that SPDR exchange traded fund symbol SPY. We had a market that last week was able to overcome that significant overhead resistance along the previous highs in the June and July, August periods. At that juncture, when that breakout occurred, we were still looking for a profit-taking cycle to occur on the downside from this boxed area going up to even towards the 115 area. But once we had about a 3-day market consolidation into Thursday, that corrected the market all the way downwards. As soon as we had that breakout day on Friday, we've now have to consider still some more bullish alternatives as to how things could play out at this point. Really, at this stage, the market continues to hold above overhead resistance, and has now got the window open for a market move that may even go as high as the 117, 118 area. What we're going to be watching here is whether or not the bears reverse this market and undo the entire rally that we saw on Friday. If we come out Monday and Tuesday and we find ourselves trading back at the 113 or 112 area, then we know that this breakout on the upside was a false start. But if we don't see anything that reverses the breakout on Friday and the markets hold up, then they're going to probably attempt to make another push that could see 117, 118 on the upside. Next here, I want to take a look at the ISE U.S. Regional Banks Index, which is a symbol JLO, and we saw a market that basically it hit all the way down at the 20.5, 21 area and recovered relatively well over that span. And we were watching the 22, 23 overhead resistance last week. We basically now have flipped it downwards and are looking at all the major support lines actually below, which is now the 21.5 to 22 is the area where we're at. Just the way that the last few days of selling occurred before that Friday little reversal up. If this was nothing but a little flagging consolidation, then this could be the beginning of a bottoming formation on regional banks that if we see any technical breaks above 23 would confirm a pivot break on the upside, which would have us targeting all those previous highs up in the 24.50, 25 area. So really at this stage, just like the S&P, we're looking to see whether or not the bulls can make that Friday reversal back up stick. And if they do, then we're going to be watching to see whether or not these can make that technical follow through to open the window for that upside. Next here, I want to take a look at the ISE Syndex, which is a symbol SIN. This is an index of all the casino, tobacco, and distiller companies. And we were also focusing on that flagging formation in the month of August, and subsequently this rally has now broken the market to higher highs. And just the same on the other charts that we looked at, we have that little flagging formation right here on the downside. And if in fact that reversal on Friday is going to stick, and we'll see whether that market can follow through higher. But if it does, then it opens the window for, in this situation, for the Syndex to rally up towards the 118 area and potentially even as high as the 121 to 123 to retest the April highs. So we're going to be watching where and how far it could follow through on the upside, but there certainly is room for that, especially if the whole market is going higher at the same time. Next here, I want to take a look at the ISE Home Builders Index, which is symbol RUF, and more or less we saw a little double bottom occur here, and we've been channeling a very sideways formation between the $8 and $9.50 area for the Home Builders Index. But overall, this has been a very, very beaten up sector, and the sentiment is extremely poor here, and more or less in that light, there's no further technical damage being done. So as soon as there's any catalyst given to the home builders to show any signs that things are stabilized or improving, then the home builders actually has a legitimate chance of springboarding above 9.5 and making a full attempt to retrace higher to the $10 and $11 areas on the upside. So long as this trade range holds, anything that breaks above 9.5 will really open that window. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and we were also concerned about this one, just like over the last few weeks, no different than the regional banks were suggesting that if the market was to go through a deeper profit-taking cycle, that these indices could come back for like a double bottom retest of major support lines. But more or less, that retracement zone lies in this box right in here, and really never the natural gas stocks never broke down, and now had a very strong Friday reversal back on the upside. If this upside rally breakout sticks, then we could actually have a more trade range bound price action, which would have us at minimum come back and retest the highs that were put in around that 100-102 zone up above. So we're going to watch again, just like the other markets, if Friday's rally can actually stick on Monday and Tuesday. And finally, I want to take a look at the mini FTSE 100 index, which is a symbol UKX. More or less, we had that very bullish breakout out of this flagging formation, and UKX actually finished its measured move higher. But again, just like the S&P, that would basically consolidate for a better part of 3 days. If this little consolidation here actually continues to hold, any technical breakouts above this 560 level could follow through into that 570, 580 area, all the way to the previous highs in April before the whole market correction started. So we're watching again to see whether there's follow through. Recognize that all the markets are really moving in unison, and this is usually the type of thing that makes a market bullish, is when all of the indices are sort of moving directionally in the same way, and that's what makes a broad-based market rally. And what we're looking here is whether or not all of these can actually make the stick, and if they do, then we should see good solid follow through on all the indices. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.